The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A warm welcome to this Friday edition of Scorebox with Karen Cho and myself, Steve Sedgwick. These are your headlines this morning. China's economy grows by 5% in 2024. Actually, 5.4% in the fourth quarter, hitting the government's target after a strong fourth quarter driven by robust exports and a flurry of stimulus measures. Wall Street closes in the red, weighed down by Apple, which has its worst day since August, following reports of weak iPhone sales in China.
French Prime Minister Francois Bayrou survives a motion of no confidence and continues to talk to secure support for his 2025 budget. President Biden will reportedly not enforce a ban on TikTok due to take effect Sunday. EU Commission EVP Henna Virkkunen telling CNBC Europe's regulations must be adhered to.
They have to respect our rules in Europe, and that is very clear, and it's fair for everybody. We have same rules for all the companies, for European companies, for American and Chinese companies.
So we spent enormous amounts of time digesting the last weeks of the Biden administration and the oncoming Trump administration. In the meantime, our top headline today is about China. We're going to spend a lot of time on this show talking about China. We've got Richard Harrison as well. We've got Kelvin Lamb's going to come up and talk about this. So there's a lot of experts on China. We've just had 5.4% growth in the final quarter of the year. What are your thoughts?
China's growing. That's the message that the authorities want to push out into the international media and to those on the ground and to business people as it's put up the sign that it really wants to do business in the international arena all ahead of the incoming Trump administration. But the reality is, if you read the stories on the ground and some of the anecdotal evidence, it doesn't feel like it was a great year. People are talking about the fact that their companies were having to move faster to do the same thing, that they saw job cuts. I mean, when did we hear about Chinese companies acting like Western companies and cutting back because revenue was under pressure? And that's a very Western phenomenon, but we are seeing it on the ground in China. So it doesn't sound as though you've got an economy growing at the pace that authorities had been saying that it's growing at. And don't forget, just a couple of weeks ago, there was a big slapdown of a Chinese economist who was pointing out, well, to me, it looks like the economy is growing at half the rate the authorities are saying. And he was quickly silenced by authorities. So I think there are questions today as to whether we are seeing the genuine pace that is said.
I think you have encapsulated it perfectly. I don't think it's anti-Chinese to say that we doubt the official figures. And I don't think the PBOC and the government believe the official figures. Because if they did, they wouldn't be throwing all that they are at lower interest rates, at various structural reforms, at huge amounts of stimuli, and about fiscal support for the consumer and indeed for corporations and for local governments as well. If you are growing at 5% when you are going from an industrializing to an industrialized phase, that is fantastic. There wouldn't be the same panic and scaring of the horses in so many ways. I'm afraid to say every bit of evidence that you see from international companies, from the shippers, from the luxury goods players, when we talk to Charlotte as well, do not indicate that we are growing at 5%. So there are question marks out there, and we are right as a business channel, and it is not anti-Chinese to point that out.
If it were growing at that pace, you would see some stronger domestic consumption, surely. I mean, people have a feel-good factor when the economy is growing, so you would see it domestically. That simply is not happening, and I think the Lunar New Year holiday is going to be fascinating to see those travel and spending habits. But the other point is closer to home. If China were growing that fast, surely we would witness it in the German economy. We just had confirmation this week that the economy was shrinking for a second straight year. So even with a boost at the end of last year, it didn't really seem to do much for the German economy. So some of the so-called China proxies, I don't think are witnessing much of a bounce thanks to this China growth story.
And I'm just going to point out one more thing as well. I've just put into search engine how many companies are there in China. There are, at the end of 2023, 184 million market entities registered in China, of which 58.3 million were enterprises. to have every data point from every part of one of the world's most populous nations with 184 market entities at the end of 2023 and only have the final figure by the 17th of January, that for me is an extraordinary piece of data accumulation for the fourth quarter. We better move on because we've got an expert. China's economy grew 5.4% in the fourth quarter, its fastest growth since the second quarter of 2023. It helped lift the country's full-year growth, as we mentioned, to 5%, topping estimates and hitting the government's target after a series of stimulus measures aimed at boosting domestic demand and fighting off disinflation. There wasn't the only indicator out of China this morning. Industrial production also picked up pace in December, expanding 6.2% on the year, its fastest growth since April. Retail sales also rose more than expected, up 3.7% in December, helped by preparations for the Lunar New Year holiday. But fixed asset investment rose slower than expected last year, dragged down by the ongoing slump in real estate.
And the threat of tariffs from US President-elect Donald Trump looms over China's economy, with Beijing warning the country's economy faces deepening external challenges. Banks, including Goldman Sachs and Standard Chartered, are already forecasting a pullback this year, each seeing GDP growth slow to 4.5%. Asian markets in session today, we are seeing a bit of a mixed bag. Tokyo stocks down, in fact, suffering in the session and across the course of the trading week. Hong Kong stocks, China, just seeing some faint green today, modest uptick on Hong Kong in particular. We've got the Kospi down by a modest amount in Australia too. So it does look cautious away from the China markets.
Kelvin Lam is senior China economist at Pantheon Macroeconomics. Kelvin, Karen and I have looked at a lot of figures over a lot of years and looked at a lot of economies as well. We are not economists, though. You are, and you're a China specialist. Do you believe that China grew 5% in 2024?
I think, well, the market shouldn't be focusing too much on the GDP headline figures, as you said, because there are lots of motivations behind setting the 5% target or the actual GDP figures. I think they're mostly, I can call it aesthetic at best, the numbers they put out. I mean, we normally will look into all the different high frequency data to judge the performance of the Chinese economy. For example, in the past, we look at the Keqiang index, but as the economy moves away from manufacturing based to something that is more consumption based, we look into the number of people going into cinemas to watch films, for example, things like that.
Okay, so I think we're all in accord that it is perhaps stretching it a bit to say, yes, we all believe in the 5% figure. So let's move on from the 5% figure and look at 2025. And this is perhaps the most important thing. Are all the stimuli that are in place on a monetary and fiscal and structural basis going to create sustained growth in China and a recovery in the consumer in 2025? Or is a lot more work needed to be done?
I'm afraid that a lot more work will need to be done. And 2025 doesn't look too great for China as well. The Chinese economy is definitely facing an uphill battle at the moment. I think on the one hand, domestically, China has to boost domestic demand, which is currently quite weak, in order to stop deflationary expectations from taking hold. At the same time, you have structural reforms to be made to make future growth more sustainable. And this is the bit that they need to do more, I think, because at the moment, we don't see a lot of structural reforms to come through in terms of facilitating the structural shift from property-driven growth or infrastructure-driven growth to something that is more consumption. I mean, the vouchers that we've seen so far, consumption vouchers, they are very small in scale and they are done by local governments and just, sporadic basis. It's not enough to drive the economy towards that direction wholly. I think probably they need to do more in terms of restructuring the hukou system so that, people save less for precautionary savings and use more of the savings to boost consumption that way. Also externally, China is facing some problems with Trump administration, right? So, tariff is potentially, all those tariff measures and all those potentially technology isolation measures that Trump is going to impose. The Chinese leadership recognize this and they promise to do more. We expect more stimulus to come through, monetary stimulus-wise and fiscal stimulus-wise to boost domestic demand. particularly consumption. But because, as I said, that we are in that structural shift between the two, the data coming out of China in 2025 will exhibit a fluctuating pattern of improvements and deterioration throughout the entire year, sometimes good, sometimes bad. So it will be a very roller coaster year for China.
Right.
And we're looking forward to that.
Kelvin, good morning. It's Karen jumping in. I want to bring up a quote that I saw this morning, thanks to Reuters, and they were talking about an executive at an industrial automation services company, effectively saying that the data today was different from what most people felt, that effectively was like notching up the difficulty level on a treadmill, so running faster to stay where they are, which is just interesting from the concept that we're seeing more stimulus poured into the industrial sector, particularly this red hot part of the Chinese economy, yet people even working in that particular area saying things got more difficult. What do you make of that, given all the help that's been handed out to try and drive the EV ecosystem?
I think generally speaking, I think you're right that in terms of stimulus, that a lot of people don't feel it, particularly because the stimulus that the Chinese government actually puts out so far has been more strategic industry based, so EV related or maybe white goods related. So in today's data, activity data, you see, for example, retail sales or industrial production growth, but they are very localized in boosting those areas, and the rest are still a little bit weak at the moment. And we're talking about production level, but the general job environment in China at the moment is still quite weak, and therefore most people still don't feel it. And there's a reason why they do consumption vouchers before the Chinese New Year, because some people say that it's because of preserving social stability reasons.
Kelvin, let me piece together two stories that we heard from Trump's Treasury Secretary pick overnight, Scott Bessent, and he's talking about some of the tariffs and using those tariffs to counteract distortions, and of course the Chinese very much front and centre here. What we heard from the industrial data was effectively that deflation at the factory gate is driving down prices. We know that there's been a huge export-led drive, perhaps to get ahead of the tariffs. In that context, is China creating even more of a headache for itself by front-loading some of those exports at a lower price ahead of tariffs?
I think if I look at the export data previously, I don't think the front-loading exercise is not that clear-cut. Partly because of the fact that when you look into the month-on-month seasonal adjustments growth, we don't see a particular pickup in terms of the growth towards, say, US, for example. The second thing is that apart from general growth, year-on-year growth, China is exporting more towards to the US. They're also exporting better to other areas in the last couple of months too. So the front-loading argument isn't that clear cut. But I guess that China is expected to export deflation to the rest of the world in the near future. This is our baseline forecast, and I think that China really need to address the overcapacity issues before we can see an improvement in PPI and also export prices.
Kelvin, you're an economist, not a market strategist, but a lot of people are trying to find the bottom in the Chinese stock market. Let's have a look at the performance of the CSI 300 over the last year. It is up 18%, so there's a bit of excitement, but I would imagine if people feel the bottom is in, it will be a lot higher than that, given where it's come from as well. When do you think it is safe for our viewers, for your clients, to dip their toe in the Chinese market?
From the experience, from the conversation that we had with investors generally, is that a lot of them left the Chinese market, but they are still trying to look for good deals in China at the moment. So the investment are very single stock or selective in sectors. So I guess that a lot of them are basically buying at dips or seeing growth in that particular sector, then go into it. And you have to understand that the Chinese stock markets are in the last year were being propped up by the stimulus blitz in China in September, mostly to reverse the course, to rise by 18%. But then the Chinese government is actually a little bit wary of the fact that boosting stock market that high would be damaging for the financial market that way. So they are trying to stop the market being overreacted in the longer term. So people talk about the stabilization fund to prop up the property market, the stock markets. I don't think that will come through this year. But I guess that Chinese stock markets will probably bobble along as the fundamental improves, but we don't see a surge in it as we did in September or maybe back in 2015. We're not going to see that again.
Yeah, absolutely, Kelvin. The danger of a bubble on the stock market to consumer sentiment is just too much at the moment. I appreciate your comments, sir. Thank you. Kelvin Lam, senior China economist at Pantheon Macroeconomics. We have plenty of analysis on the blowout quarterly GDP print, as well as all the other indicators on the website, cnbc.com.
China's Vanke CEO has been detained in China, according to state media. No reasons were given, but the Economic Observer said the developer could be subject to a government takeover and reorganization. The shares fell in Hong Kong and Shenzhen. Of course, a story will closely follow for any implications for the property market. Next week, CNBC will be live from the Swiss Alps in Davos. We'll be speaking to top policymakers and business leaders, including conversations with the German Finance Minister Jörg Kukies, the new European Economy and Competition Commissioners, and IMF First Deputy MD Kite Koppennath. We'll also hear from the Dutch Prime Minister, the presidents of Poland and Finland, and the CEO of Mistral AI. That's right, the big French startup. And don't miss our exclusive conversation with ECB President Christine Lagarde. It'll be live at 8:10 London time on Wednesday morning. Our coverage kicks off Tuesday direct from Davos across CNBC television and online live on the CNBC International Live YouTube page.
Israel's cabinet is set to vote on a ceasefire deal with Hamas after the Prime Minister Benjamin Netanyahu confirmed that negotiators have reached agreement on the release of hostages. Netanyahu yesterday delayed a vote, accusing Hamas of creating last-minute crises by backtracking on parts of the agreement, which Hamas denied, saying it was committed to the deal. Despite the agreement, which is expected to come into effect as soon as Sunday, Israeli strikes have continued on the Gaza Strip, with at least 80 people killed since the announcement, according to officials in the enclave.
Well, coming up on the show, Trump's Treasury pick, Scott Bessent, says he will back the president-elect's proposed tariffs and further tax cuts during his confirmation hearing. We'll have more from Capitol Hill. Plus, French Prime Minister Francois Bayrou survives a vote of no confidence. And we're going to be getting a check on Goldman Sachs' 2025 outlook with Matthias Debo, who is the Managing Director of the bank's Investment Strategy Group. That conversation is at 7 a.m. GMT.
Welcome back. The US Treasury Secretary nominee Scott Bessent defended President-elect Donald Trump's proposed tariffs and backed greater tax cuts during his confirmation hearing on Capitol Hill. Bessent said Trump could usher in a new economic golden age, arguing it was important for the president to secure domestic supply chains and strengthen the dollar. He also warned that the US economy could face a difficult situation if tax cuts were not reintroduced.
This is the single most important economic issue of the day. This is pass-fail. That if we do not fix these tax cuts, if we do not renew and extend, then we will be facing an economic calamity. And as always, with financial instability, that falls on the middle and working class people. We will see a gigantic middle class tax increase.
Right, let us move on. US weekly. We'll analyse that, by the way. We're not going to let that just lie there, I promise you. US weekly jobless claims rose to 217,000 last week, slightly more than analysts expected, but stayed at levels considered consistent with a healthy labour market. Meanwhile, US retail sales wrapped up last year on a solid footing, increasing 0.4% in December. Key growth categories included autos, furniture, and clothing, as well as sporting goods. Isn't that fascinating? Americans buying a lot of sporting goods, and yet the doyen, the symbol, Karen, of American sporting goods is struggling so badly. I talk, of course, about Nike.
I think bad news is just bad news all around this week, whether it's hot news, softer news. The market yesterday, as you can see, in reverse. So it does tell you about an element of caution that is creeping in before inauguration and, of course, going into what is going to be a shortened trading week next week. So the Dow, the S&P, the NASDAQ, all just giving back a little bit of territory. If you look at some of the big movers to the downside, Apple in particular was one for both the S&P 500 and the NASDAQ. And in fact, I think some are starting to ask questions, what's going wrong with the Apple trade in 2025? Worst trading day since August. There was a Canalys market research report suggesting that perhaps Apple has slipped to number 3 in the Chinese marketplace, behind the likes of Huawei, of course, but also Vivo. So that competition, Asian competition, really taking the fight to Apple. The stock down 4%, as you can see, and that is impacting the technology trade for this week. One of the laggards at a sector level, in fact, a little bit of a rollover in terms of the sectors in play yesterday. It was utilities to the upside, energy for the trading week, technology, the real underperformer of the course of the trading week. That, of course, the narrative has been around earnings with some of the big banks, the focus too. I want to take you to Treasuries. The latest data point, this is where we sit. Of course, we've been closely watching whether we're going to go higher this week or go lower. And the reality is we've drifted off closer to the 4.61% mark now, thanks to some of the latest retail data as well. To the dollar and what that's meant for the dollar is king story for 2025. Euro dollar is still suffering in that context, very much struggling to get ahead, even with a couple of weak data points. So we've got 102.85 on euro dollar, down another 0.1%. Same story for sterling. It is not making much headway here, still hugging the 122 handle. Dollar yen, this is where it gets interesting. We're closely eyeing whether we're setting up for a rate hike from the Bank of Japan next week, following comments on Wednesday from Ueda suggesting it will be a point of discussion next week. So a dollar this morning is a little bit firmer, but keep in mind, look at that level. We're now 155.68, so we've come right off the 158 level in recent trades, and dollar is also gaining versus the Swissy. Oil trades, as we've watched the geopolitics, the inventory side and the Chinese data today, it is a slightly firmer trade, although we are around the 79 handle on WTI, 81 on Brent. Gold prices just drifting, morning session down a 0.1%. Opening calls. Will we pick up on some of that caution from the US markets? Well, this is how it looks. It doesn't seem as though that's going to be the case. We've had a fairly decent pace this week, another 1% yesterday, second positive session in a row. And this also looks like signals to the upside this morning. So will we make it 3 for the Friday session, Steve?
Thank you very much indeed. Karen, this isn't a trick question, but have you heard of Call My Agent, or otherwise known as 10%? 10%? You wouldn't have heard of it.
English, maybe I've heard of it.
Call My Agent. No, you wouldn't have heard of it. I haven't heard of it. It is the biggest French sitcom. It is all around the world. They love it. I've never heard of it until I just Googled it, right? Or binged it, or whatever it is.
There's only one search engine in Europe.
Well, no, the only reason I ask is because it's a really big French sitcom. But it's not as big as what goes on in French politics. Because the French Prime Minister, François Bayrou, yes, you won't believe it, there was another no confidence vote. He survived this one on Thursday after the motion failed to gain traction with the far right or the centre-left socialists. Charlotte, 10%.
Yeah,
you watch it?
I have, and I really enjoyed it.
Mega.
But certainly the drama in Parliament is
cool, I know. So what is bigger? 10%, the biggest French sitcom drama, full stop, or the French Parliament?
I mean, it would be fun if it wasn't a little bit sad, really, the current situation, whether we'd still have a government, is it toppled or not. It's
all about a talent agency. The workplace explores comedy, the inner lives of agents who make French cinema possible. Comedy, talent, does sound like Parliament.
Exactly. And you know, like recurring, how do you say, casting for Prime Minister this time around, you know, who is going to be the one that's going to stick. Well, looks like for François Bayrou, he is going to survive, at least for a little bit of time. He survived his first vote of no confidence. And in itself, in the numbers, there was no doubt he was not going to be toppled because the far right said they were not supporting that vote that was tabled by the far left. But it was a key vote because it was also revealing understanding the forces at play at the moment and what the socialists would be voting or not. And the socialists decided to not support the vote of no confidence. And that's important because they are instrumental and they are the party that François Bayrou negotiated with potentially around a budget and potential compromise there, unlike his predecessor Michel Barnier that was toppled after he tried to compromise and negotiate with the far right. Bayrou turned to the left and it looks like at the moment he has them on board. So in itself, maybe it is a small political victory that they have splitted away the socialists from the Nouveau Front Populaire, that left-wing bloc with the far left, the Greens and the Communists. The socialists have voted against that bloc. So that's interesting dynamic here that maybe things are moving. But you remember that to get them on board, of course, he's agreed, the Prime Minister, to reopen the pension reform chapter and potentially renegotiate some aspects of it. The unions are meeting today for the very first time to put their proposals on the table around that potential pension reform. So interesting to see. He's gained a bit of time. He's not going to be toppled just yet, and he potentially has a socialist on his side. So, he's already done a little bit more than his predecessor.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabi Lekumete, weekdays on CNBC.